Power is a key ingredient in driving economic transformation. Last week, we saw stakeholders in this space drawn across the region meeting in Kampala to come up with strategies on how to pool this resource to drive economic transformation. Uganda has invested billions of dollars in power generation, mainly through debt and public-private partnerships over the past 10 years. Out of this investment, the country today has an installed capacity of about 850 megawatts, mainly consisting of hydropower. But even before the ongoing projects of Karuma and Isimba bring on board a combined 783 megawatts, there's already more power than the country consumes, or can be evacuated to consumers. In order to make its fairly aggressive energy investments viable, Uganda is looking at the Eastern African Power Pool.
It has encouraged connectivity of the national grids. By national grids, I mean the transmission lines that connect the countries. How will this help for the region? It will help the region by encouraging power trading. And power trading has no borders. It's like any other commodity. Electricity is no exception.
For this to be done successfully, however, the country has to be able to provide its power at competitive rates. And Uganda, according to Energy Ministry officials, has a competitive advantage given its hydropower generation capacity and potential.
In some countries, electricity is produced cheaper than in other countries. Therefore, by interconnection, as a region, we shall benefit from the economies of scale and therefore reduce tariff.
With its eye keenly fixed on this trade, the country is already making major investments in this area.
We've advanced far. We recently completed the interconnection to Rwanda, and we are 90% interconnection. The second line to Kenya. And we've got a memorandum of understanding with the Democratic Republic of Congo, whereby we are now looking for financing for the interconnection to Western DRC. And we've now also got financing, we are about to get financing to have the second interconnection to Tanzania.
This, however, is not coming cheap.
That the investment requirement for Uganda, in terms of the transmission for the next 15 years, is about $3 to $4 billion.
This has got some experts wary of its impact to the economy, given the fact that it's said to be financed through debt at a time when there are already concerns about the standing of the country's total debt in relation to its economic size.
One project, just to give you an example, and it's probably the one with the biggest price tag, is additional transmission lines that has been recently floated. That the government has not yet taken a decision on what to do with it. But if you were to include that, your debt trajectory would go up quite dramatically.
But several analysts maintain that having invested billions of dollars, a bulk of it contracted through debt, the country has no choice but to complete the energy sector investment cycle, even when it means contracting more debt to invest in the last mile of power evacuation.